With interest rates coming down, is it a good time to consider a refi? The Fed has indicated that they would have as many as 3 rate cuts in 2024. Should you buy now or wait for interest rates to fall even further? Should you lock in a 30-year mortgage or do a 10-year ARM? We're gonna address all these questions and more. Stick around till the end and I'll give you a tip on how to lower your rate and where you're most likely to get the best rates on a refi. If we know that interest rates are probably going to continue to fall, how do we time it? So generally, if you're going to be saving more money than it costs you, then it's probably a good time to do a refi. You probably heard that there's like no fee refinances out there, and that's true, but as with all things in life, nothing's really free. So most refis on jumbo loans, which is what we deal with in San Francisco, that get done at a large bank, which is typically the least expensive for a refi, are going to be like $4,000 or $5,000, including lender fees, title, escrow, and appraisals. These fees can really vary bank by bank, so be sure to shop around. I'm Ruth Krishnan, and I founded the Krishnan team in Compass over 14 years ago. My team currently ranks number 2 out of 5,000 agents in San Francisco. We help buyers and sellers just like you every day make a smooth move in or out of San Francisco. If you're interested in connecting, text this number right here and we'll get back to you within 24 hours. Lastly, if you find this information helpful, make sure that you smash that subscribe button. And now let's jump in. So if you happen to have bought in fall of 2023 at a 7 or 8% interest rate, there's a good chance that right now you can refinance your loan into a 6% loan. We're seeing rates right now as low as 5.5 with a $2 million relationship with the bank. I'm going to touch base on that in a minute. So let's put these numbers into perspective. If you bought a house for $3 million at a 7.5% interest rate with 20% down, your monthly mortgage amount, just mortgage, is going to be $16,700. If it were 6%, it would be $14,400. So that's a savings of $2,300 a month or $27,000 a year. That actually sounds like a deal worth having. So with a loan that high, a 1% point is pretty substantial. It's, around $1,500 a month. So the question is, how low can they go and how much trouble is it to refi? I think that most people, including me, actually believe that rates are going to continue to fall. So there's an argument for waiting for them to fall further. But in the meantime, you're losing money every month. So if it's me, I'd probably wait a few months. I do think some of these initial rate drops are actually baked in by the bank already, but I'd probably wait till summer or fall and see where they're at. And then I'd probably go ahead with a refi and not look back on it for a while. For me personally, I hate getting a loan. I have pretty complicated taxes. I own several investment properties. I have a lot of random investments in startups and syndication projects. And anytime that I get a loan or a refinance, I have to gather up all of this information, and it feels a little bit like poking my eyeballs out. So I don't love it. But if you have simple taxes with 2 W-2 earners and not a lot of those complications that I mentioned, then you might want to refinance every time there's a half rate drop. Now you can take that money and just reinvest it back into the loan so you could keep the same loan payment every month and pay down your principal. In fact, if you make one extra payment per year, you'll actually pay down your loan 5 years sooner. So where can you get the best deals on a refi? First off, I should tell you, I sell real estate. I don't sell loans. I don't make any money on loans, but I do have a lot of really fantastic lenders that I work with. And I will say that lending is kind of a strange industry. You don't seem to have to have any financial qualifications to be a lender, but some of them do have really strong financial backgrounds and they feel sort of like financial planners. And I've had lenders present me with all kinds of creative ideas and possibilities that I never thought of myself. So it is worthwhile to find somebody that has some really good qualifications. I would definitely recommend shopping around, and I'm more than happy to provide you some names of some of the best people in the business that will fit your specific circumstance. So feel free to reach out for that information. If you think that you are what a bank would classify as an A buyer, that would mean that you have really good credit, you have great debt to income ratio, you have a good income, a big box bank is actually where you're going to get the best deal on a refi. So these banks have different rates all the time, and depending on how much business they want to have at that moment in time will depend on who has the lowest rate. I spoke earlier about relationships and how you can sometimes get up to 0.75% off for bringing money to a bank. So this is only going to be offered at big box banks. And what they're talking about is it doesn't have to be cash. It can also be assets. You can bring over stock. And typically anywhere between $250 all the way up to $2 million will get you a discount of 0.1% all the way up to 0.75% off of kind of the standard loan rate that they're offering at that time. So as far as a 10-year versus a 30-year, I think it really depends on the difference in the rates. Typically on a 10-year, it's lower. Recently, it hasn't been that much lower. So if you thought like, maybe I don't want to do this again, and maybe they're not going to go down substantially over time and they're somewhat similar, then going with that 30-year loan makes sense. But chances are you probably are going to refinance in the next 10 years. So unless, you're really, really risk adverse, probably the 10-year is what I would personally choose. It's worth discussing with your lender. So as far as buying right now or waiting for the rates to drop even more, well, we're starting to see the market really heat up. We just sold a house in the outer Richmond and we ratified it 15% above the fall comps with 7 offers. And there were actually a couple of homes close by that performed similarly. We've only just dipped our foot into February and we're seeing more heat in the market since last spring. And I would say it seems more heated than last spring. But right now it is a little spotty. Not every property is popping. And my guess is that if you're going to buy in 2024, the sooner that you do it, the happier that you're going to be. The downside right now is that inventory is light, and it's certainly possible that we will see more inventory come on the market as rates drop down and sellers feel more inspired to sell. I mean, right now, 70% of people who hold a mortgage is below 4%. But the closer that we can bridge that gap, the more inspired someone is going to feel to give up their current mortgage and take on a new one, which is going to bring on more inventory. Now, I want to be clear, in San Francisco, we always have an inventory problem. So we're not really far away from our historic averages on inventory, but we are a little light for this time of the season. This time of the season is always light. We will see some more things come on as the spring commences. Hopefully I demystified some thoughts around refinancing. So whether or not you're thinking about making a move in or out of San Francisco in 2 weeks or 2 years, feel free to reach out at this number right here and we'll get back to you within 24 hours. Also, there's a link to my newsletter where I publish great content like this. So feel free to sign up and don't forget to smash that subscribe button.